Well, to open up our panel, perhaps I would share some personal touch and attitude to the topic, and through that you would probably understand better where we are now and why we have the processes that we see today. I really, back in 2015, I actually learned about the Bitcoin phenomenon, and I thought back then that it was like an interesting mass media drive, and it was an alternative to the question of what we are going to do with the international financial system. You remember the 2008, and that was the source of our concerns about the future of international finance. And one of the answers was Bitcoin, the technology that was viewed to be very fast and super fast and new. But this technology was picked up by the new generation. And back in 2017, when we first started having those Bitcoin quotes of peaking at about 20,000, then I do remember that peak of the interest of the financial community to it, because it was quite difficult to find the value of crypto trading, because the initial goals were unattainable, as many thought. The alternative banking system, well, I don't think that it was actually created. Regarding the transactional value, then it was obvious only in the gray economy to service some illegal transactions and operations. So in that sense, we all thought that the regulators would really do their business, and they would crush that emerging crypto market. No, if you're talking about Bitcoin, the system back then was not up to its purpose to provide quick service. And back then, I actually was bold enough to short the Bitcoin, and I was the only one. But within the next 2 years, the Bitcoin was not growing, but I managed to make some money on my short positions. But then you had this interesting story. When the idea did not die away, and despite the initial concerns, the interest is still there. And what we see in the last year or so, you can more or less call the institutionalization of such trading, when you have this mass-scale interest, which is still there, and it is required by the professional community which we have here today. Just so happened that in the crypto trading also has some economy behind it, not only like paying your utility bills, but there's also some value which finds its customer and also institutional customers. A very media-driven story, a very contradictory one. Many of the economists still believe that this is rather like a manipulation or speculative type of transaction, etc. Hard to argue with them, because they don't see really this intrinsic value in those transactions. But we also see more and more signals that there is some value there. Some academic economists actually think that this is a way to diversify your investment portfolios. Perhaps today we would like to discuss that with the market players, with those who do see some value for their clients in such transactions, and why, instead of being dead, this market is still growing. And we do see the growth in the value of the first cryptocurrency, which is Bitcoin. Perhaps I would give the floor now to Sven for the initial remarks. Sven, can you hear us? Sven, can you hear us?
Yes, I can hear you. I hope you can hear me. Is that correct?
All is well. Sven, maybe you can share with us your views about your experience actually, and you do have ample experience in, servicing your clients. Why clients will actually choose to trade in cryptocurrencies, and why do you think this is a rational behavior, and what is the economy behind it?
Yes, thank you. I just shared a chart, and this is an analysis which is not of us, but we did the same analysis as well. But I would like to give you some empirical evidence here from people outside my bank. And what actually, when you think about institutional investors, what they think about is obviously a return on one hand, and on the other hand, keeping the risk relatively low. So the major question is whether cryptocurrencies can add value to your portfolio. And you have here the efficient frontier curve. And what, for example, the cited economists came up with, and our analysis, in-house analysis confirms that, is that with kind of cryptocurrencies, in this case here, it's a cryptocurrency basket, it's not just Bitcoin, you can kind of add value to your portfolio by increasing the expected return regard the risk that you take. However, and this is a big disclaimer I have to set under this kind of analysis, is that for many asset classes, as we regularly do that kind of research and this kind of input goes into our strategical asset allocation, we have data for asset classes like equity for 50 years and even longer. It's still a very young asset class, I would say, and therefore it's still difficult to really takes this result one by one, because cryptocurrencies exist since the great financial crisis, which is a bit more than 10 years. In the beginning, liquidity was very low, and it's still it's improved, but it's still far below the liquidity levels of other asset classes. And so doing that analysis with a time series of like 7 years, 8 years, still has some risks attached to it. So I would take the results with a piece of salt, but if you do the analysis, you come probably to that kind of conclusion. So here it's still too early to finally judge on the asset class. But as I've said, if you do that kind of analysis, you come to the result that it actually improves the risk return profile of your portfolio.
Thank you.
Well, do you think that this is the main purpose of investing into crypto, or is it only a small fraction of the whole idea, a small piece of the pie? Perhaps I can comment on that. Indeed, I should introduce myself. Konstantin Shulga, Finery Markets, and I was a professional player in the FX and derivatives and equity for 13 years, and quite recently we decided to have our own project of cryptocurrencies, and we do see that this is an asset class now, and this market is institutionalized. And this is the trend which is now going upwards in full swing. Now, what is the benefit of using cryptocurrencies? Probably 4 points there. First, the speculative part, which unfortunately or fortunately dominates today, because many retail clients who like the volatility in this asset class, and this is normal, I think, for a relatively new asset class. Such a volatility is okay, but perhaps in future this volatility would be less. Next would be long-term diversification. We saw news from last week, from end of last week, that the first pension funds in the US already allocated some funds for the newly launched ETF, and this is on the buy side to invest into the asset class, which has some limited offer, and that might be a hedge from inflation, and that's quite a popular idea among such clients. Transactional business is another growing business, and again, coming from an international company, some of our employees are already being paid in those stable coins because we have a team, in 10 countries, and buying in all those 10 different currencies would not be really easy. And we are not a big thing, we are just a startup, so for us it is easier to manage our wage bill in stable coins. It was initially it was seen as a high risk thing. Now it is mass adoption. Many of the clothes shops in Europe are already accepting bitcoins as a means of payment. Also, the crypto market is the most fragmented market today. We have like thousands of various venues and platforms, and the possibilities for arbitrage would be gigantic there. So that's the fourth aspect of this market. Alina, what is the experience of your company and how your company provides access to the market? Maybe a bit later you will show one slide of ours. Indeed, we are providing infrastructural solutions for trading, direct channels of access to the exchange, putting the machines in co-location areas so we can work with raw market data with low latency. And our clients are institutional clients, banks, and all those that use latency-sensitive strategies of arbitrage and market making. What is of interest to our clients, which markets they prefer to trade, this is something that we record and that we can discuss on trends. I do remember that the first clients that ever needed access to the crypto exchange or low latency access were in the end of 2018. Those were global market makers, and they had some problems because the major exchanges, they are all in exchanges. We know Aurora and Illinois and other exchanges, but even BitMEX, FTX, Corebase, and whatnot, they're all in clouds. And the point there is as follows. Those exchanges are cloud-based, and clouds are not really fit nicely to work with those applications that we had in mind. Now we have a developed solution for that, and all those applications work nicely. And our institutional clients really can get a free test ride of those applications and see the current performance and what benefit and what advantage they can get in performance. Now, this year we already see growth of another kind, if you like, than in 2018. A huge incremental growth, and our client base grew by 300%, just because probably and mostly because of the crypto teams. And why is that? First thing, we have the teams in place and the clients already there that are drawn by the volatility and high arbitrage in crypto markets. And we also did some research a couple of months ago, and that study showed that on average the teams are trading in 7 markets at the same time. And all those markets are scattered globally. In the company we have a term which is we call the Golden Triangle: Dublin, Tokyo, and Hong Kong. And this is a triangle where you have most of the arbitrage and where you need to have access to market data. And this is the area where low latency solutions are most needed. In the beginning of this year, teams had to really optimize their latency. Because we're talking about crypto markets, but the crypto markets are not at the level of the traditional markets. So they need to think about whether it is going to be advantageous to them. And of course, now you have the demand for such solutions in the crypto markets. Now, we already see this speed race in the crypto market, and we are only in the beginning of this race. Again, why in crypto markets low latency solutions are in such high demand? The thing is that we already see some good developments of the derivatives. And, well, our research shows that any trading in derivatives really requires low latency solutions. We do have good futures instruments, but many marketplaces are saying that options are still underdeveloped. And now many exchanges and many liquidity providers and other marketplaces have plans for next year, somehow to really push the options, and we, as provider, really would expect more interest in the low latency solutions.
Could you please bring up my slide? Yes, the race is on. But we still have a lot of opportunities out there to join this race, because Visa versus conventional exchanges, you can still beat those who use online internet or who use Amazon Cloud, for example. You can win more than 70 milliseconds. That's a round trip. These are the figures through the Avelacom versus IWS latency. So the crypto market is picking up pace, and they're still using a lot of the trends that's leveraging a lot of the trends that conventional exchanges have been using, but we're still making our first step. Andrey Mikhaylishin, let's talk about it. Could you please introduce, can you say briefly what's your experience, what have been your observations? Hi everyone, thank you for the invitation. Well, so far we're the only company in Russia that has been able to use crypto as an asset, and we have adjusted it to Russian legislation. Again, you can actually use crypto to buy coffee as a settlement, as a means of settlement, right? As it was initially designed. Yes, absolutely. The initial design idea. So it fits both the laws that govern this area, and we're also been through the sandbox set up by the Russian Sandbank. And initially I was a crypto enthusiast, and I'm more of a centrist right now. I'm not that passionate anymore. Once we set it up, and when we did the last mile for banks and for stores, we're fully aware that digital money era is ahead of us. We talked a lot earlier about the use of crypto assets as a commodity instrument, but here's what we need to understand. We are living through revolutionary times. Money have changed forms and shapes just 5 times. First it was salt, hide as a commodity, then to like 100 years ago, we received a cashless means of payment, and today we can't imagine our life or trade without cashless funds. So that's been a game changer. So we're in the digital money era. And it's not just about crypto. It's about digital currencies introduced by the central banks. What we had last fall, the autumn of 2020, was a turning point. 86% of the central banks around the world last autumn announced that they are considering a digital national currency. These currencies, by and large, are supposed to leverage all the high-tech advantages that cryptocurrency have, and basically fiat currencies will have the same advantages as crypto, and at the same time they will not have those disadvantages that crypto have. Let's talk about retail digital currencies. According to the BIS and the World Economic Forum, there are three types: one-tier, two-tier systems, and a hybrid one. You must have seen the consultative report by the Central Bank of Russia issued a year ago, and in April this year, I guess, the central bank has come up with a strategy for the digital ruble platform. So here's what we have. Next slide, please. It's not a two-tier system anymore, or one-tier system. Again, we can debate about it if you want later on. I'd like to go back to China. Digital yuan, digital renminbi is a double-tier system, but actually it's a hybrid one by international norms, by international standards. And again, access, in terms of access to the markets and trading, the previous panel talked about customization. So the beauty and power of digital currency is in smart contracts and some other technology. It allows you to automate everything and to digitize everything and to make it, what, cheaper. Well, let's go back to the slides. So we talk about digital renminbi, talk about digital ruble. Next slide, please. Okay, we have the digital ruble, and if we start using it for our payment infrastructure, there might be an issue. If you issue some kind of digital banknotes, digital cash, like replacing 1,000 ruble banknote with the same in the digital space, what about change? If I need to pay 150 rubles and I have a digital currency, digital banknote of 1,000 rubles, what about the change? How are you going to split it? How are you going to break it? So there could be several solutions. This is the slides. This is what you can see on the slide. The change could go from those who accept or those who pay, but that would make life more complicated. That will make the platform of the digital ruble more complicated. It's much easier to look at cryptocurrency experience. Take one Bitcoin. It consists of a lot of parts. So basically, Bitcoin is an indivisible thing. Maybe it's much better to introduce not the digital ruble, but the digital kopic. And then it would allow us to make payments much faster. That's what I wanted to say. Thank you. So it's a great segue to the next question. So we have the central banks issuing digital currencies very soon. Digital renminbi, digital ruble, digital dollar. These projects are a few years away, or some are already implemented. Konstantin, you said that you pay to your staff stablecoins as a salary. Well, stablecoin is basically a digital dollar, right? as a proxy for the digital dollar. And the bitcoins, those stable coins that we have right now, and that's what we're going to discuss, is that we don't really know how secure they are because they depend on the private institution, right? So you have a bank, and a lot depends on this bank. Unlike digital currencies issued by the central banks, they might address this payment problem. Is that correct? If you introduce these digital currencies, it will kill the payment system in crypto, right? Or not? Potentially, yes. So you do have this intrigue. But the private issue of stablecoins has penetrated all the segments. It's been quite widespread. So I think they will coexist. In the next years, we'll have digital euro in Europe and something else in other countries, and stable coins will coexist. And the US is now mulling regulation for the issues of stable coins, just like they regulate banks. There will be capital adequacy ratios, there'll be provisions. But what about the business? Will it kill the business? It won't kill the business because the business is mature enough, it's been an adult already, and it's been getting enough sponsorship money, kind of. Stablecoin is one of the bits and parts of that ecosystem. Take Coinbase. We all know Coinbase, it's the operator who owns the CBDC, USDC. Again, it's part of an ecosystem. And I know there's a huge number of issuers of stablecoins and regional ones who use them for their own businesses, including in the payment services. So there are dozens of business cases, and it doesn't only boil down to issuing stablecoins, but there are a lot of applications, and they will continue to grow and coexist. Stablecoins and the main cryptocurrency have a lot of issues. I have one of the slides. Yes, this is the main barriers for engagement in digital assets. That's a sum up of a Citibank report, just recent one. In April, May, they did a survey and published it in Q2. Here are the 5 key hurdles that institutional asset managers are facing in using crypto. So the key one is regulation. And the good news is that both in the US and in the EU, regulators would like to negotiate, and they have reaffirmed more than once that they will not ban, they will rather regulate and be in open dialogue with the market. So these key boogeyman, so to speak, this purple concern will be resolved in a year or two. And then what we have? We have the maturity of the market, the maturity of the infrastructure itself, and less of IT security. There have been 10 cases of theft and hacks into some exchanges. Although technology is far ahead and there are so many startups right now, and the companies would like to keep track of all those transactions for like hundreds of thousands of transactions. In terms of security, I think this issue could be resolved, and then in terms of the maturity of the market, I hope there will be more companies that will come from the traditional sector and experts that will come from the traditional sectors, and we'll get into more practical hands-on terms, hands-on issues rather than theory, high-level issues. So here's the microstructure of the market. We've been observing a very interesting pattern. We studied publications by the biggest macroeconomic events in the past 6 months. policy rates announcements by the Fed in the US, unemployment data releases, and inflation in April 2021. We see that when the news went out, across all classes, assets responded similarly. But in the previous years, the price of Bitcoin never responded to this. Why? Because it's the first year, 2021, when the prices for Bitcoin started to behave much like other assets. It means that institutional investors are there, they dominate, and they've changed the pattern of behavior. The next slide, Here's the price changes in the biggest exchanges, including OTC. At Finery market, we are the first and the only multi-dealer platform with OTC market makers. So we benchmark pricing and the behavior during that period of volatility. What we see so far is that it's pretty volatile on the biggest crypto exchanges, and as for OTC providers, they can give you more narrow range of quotes. So that's the aggregated order book from the top 5 biggest OTC market makers. It shows you the fragmentation of the market. Coinbase has about 30 million retail accounts, but during the market volatility, the market makers sort of quit. The prices behave in quite in a peculiar way. Again, I can refer you to this report, and you can download it at the stand. That's it. Yes, this is quite an exciting development. We will go to you, Sven. Can we tap into your brain and ask you? What's your take? What's your vision? What about access to the market? What about secure access? How do you avoid the issues that we've been talking about, that Konstantin mentioned right now? What's your vision of the evolution of access to the ecosystem? Sven Schubert, over to you.
Yes. Thank you. Yeah, so I'm obviously looking at things from the perspective of an institutional investor, and maybe I can share just one slide again here, which is this one. Comes from a crypto hedge fund report in 2020, so it's a bit outdated probably, but the proportions are probably still correct here on the left-hand side. That so far we have seen mainly family offices in the crypto as a crypto investor and high net worth individuals, and I think there are a few reasons for that. First of all, you spoke about it. It wasn't that easy for institutionals to access that kind of asset class because, you know, if you're a fund manager, you need an ISIN number, right? You cannot simply have a wallet and add it to your fund. That is not possible from a regulatory perspective. So in this regard, we have seen some improvement clearly with the recent SEC ruling. But still, a purist would probably still not be satisfied so far because future-linked funds, you need to roll the forward as the future contracts which are expiring, and that is still quite costly. So it's still not probably the cheapest alternative. So it would probably be cheaper if you would have an ETF based on pure Bitcoins. But I think this is not the big hurdle anymore. So I think things have improved clearly, and we have seen clearly demand from institutional investors over time. But I think there's another headwind actually for institutional investors to come in. You mentioned already the regulatory risk, but this is just a starting point because once the regulator gives his okay, then internal compliance has to go to work, and they have to look in from an internal internally regulatory framework, and then you launch a product, and then it goes back to the regulator. So it's a little bit of a back and forth here. So it's probably too easy to say the regulatory kind of approved an ETF in crypto, and now institutional will move in. Clearly, I think this is a very good sign for institutional investors, but still more work has to be done. Compliance and so on have to go and look into this issue and bring up products here. So I think there's a very good starting point that we have seen so far. And from that regard, I think there will be increasing demand going forward. But as I have said, a pure ETF on cryptocurrencies would probably be the ideal case. Would make things even cheaper from here onwards. And then maybe a final slide to show here on my slide deck on slide number 10, which is coming from the same report here with major concerns of institutional investors and, as mentioned, regulatory uncertainty is on top. But there's another one like client reaction and reputational risk. And I think that is a good link to the chart I have shown before, because as an institutional investor, how often do you see your clients? You have probably annual meetings with your clients, in particular only with your big clients. And it's not so easy actually to put cryptocurrencies and change the strategical asset allocation of your portfolios, right? You have to bargain with your clients. So it's a long process. So it takes kind of time. And I know from my experience, you really have to discuss this with clients many times. So it can take actually 2 years or so. Until the client has the understanding of the new asset class and is willing actually to put it in a strategic asset allocation. So what we have seen now with the SEC is probably a starting point, a good one, but it's a process for institutional to really step in here.
Спасибо, Sven.
Thank you, Sven. I now have a question for the audience. Perhaps I can launch the first question for the poll. And indeed, we wanted to ask the audience about their trading experience in crypto assets. And now you see this pool available on screen. Perhaps you can go to the application and just provide your answer. When did you first transact it? Well, I shorted my Bitcoin in 2018, so perhaps I was quite an early entrant. But I wonder whether it indeed captured the audience that we have today, online and offline with us. I wanted to understand, maybe not in too much detail, where we are in terms of the opportunities to play in the crypto market in Russia. So what can be done and what categories of players may have access to the crypto market in line with the current legislation, and what are the prospects for that? Look, as of January 1st of 2021, we have the law on digital assets with some definitions there. Now, we do have the law, but we don't see its implementation in the market. Probably that's the question to the mega regulator, which is the Bank of Russia. You all heard and read about Sbercoin. It has nothing to do with coins, but still there was some idea of digital issue from Sber and Nornickel. Nornickel actually had some ideas about stable coins, but the Bank of Russia never approved either of the applications, either of the projects. Not saying that this really law is bad or good, it just doesn't help Russia to ground the real cryptos, and all the projects that we have today in Russia who work with crypto, they have to open the offices in other jurisdictions and get their licenses there, and proceed with working with the Russian institutions. Back in 2018, the president, I think, instructed the government and the regulator to develop the appropriate regulation and law. But like I said, the first bird was this Federal Law 259 on digital assets, but they're still not there. We are in the beginning of the way yet. So, Konstantin, maybe you would like to add something. I can say that this is quite a sad story that we have so many startups with Russian founders. I mean, you go to Chicago or New York, you would have a lot of Russian founders with big international names, but they cannot really work in Russia because of the legal restrictions and limitations. So we do not expect any lifting of those limitations soon enough. Really, we would love to see that so that these ideas would evolve and the financial industry would develop. I agree with Konstantin. According to different estimates, and actually in my company, we are preparing regular reviews as part of our cooperation with the Russian Chamber of Entrepreneurs and Industrialists. Russian names in that sector take maybe from 10 to 20%. And if you take that, it would, and if you really compare the volumes of those companies, it would be comparable to the Russian GDP. And I think that the Ministry of Finance agrees with us in that. And the potential, the capacity there is very high. Now we have the results of the survey. We do see that a lot of people in the audience, 36%, really are very skeptical. They are not going to trade in digital assets. And also a big chunk of the audience try their hands at the cryptos before 2018. Well, 36% is not the majority still. And most of the people actually did try cryptos at some point in time. Now, second question, if there is any dynamics behind of this situation, perhaps we can have the second question coming up, and perhaps the audience can vote again in the last 6 months. How your involvement in cryptocurrencies changed. And while we are waiting for the answers, I also would ask the audience to be more active in asking questions. We do have one question about crypto. Price discovery. Where is it happening? It is said that price discovery actually flowed into Tokyo in recent years. What is the reason for that? And so people also think that liquidity went into futures. Perhaps our colleagues from Chicago would be happy to comment on that if we have sound with them. Not yet. We don't have the sound with them. But let me then take this question. Indeed, the idea today is that price discovery is not available from one single place. Cryptocurrencies are the most fragmented market. And when I talked about the hundreds of venues where transactions are done, this is it. And also, about half of the volume happens in OTC, spread across 5 to 10 or 100 largest OTC liquidity providers and market makers, and a big chunk, which is still less than half, would be centralized exchanges. We also have decentralized exchanges, like a new beast on the block, and we have the new stars there with HFT players coming in, trying to find some combined options for them. And so there are three big clusters, centralized exchanges, decentralized exchanges, and OTC, between whom they split the volumes, but you don't have a dominating player. Apart from probably centralized exchanges who probably have the top 5 or 10%, but so otherwise there's no dominating power. So that's why you don't have the price discovery. In OTC market, that price discovery could have been achieved, and we would have the trader order book there. I do not expect this to happen within the next year or two because of this huge fragmentation. Giovanni, I hope that you can hear us, and I hope that you heard most of our session. Perhaps we'll try to reconnect with you. Perhaps you can share your view and your experience in terms of
can you guys hear me?
Trading.
Sure. Can you hear me? Can you hear me now?
Yes, we can hear you.
Yes. Perfect. Yeah. So when we look at CME markets, we now have 4 cryptocurrency products in market. So we introduced Bitcoin futures, which is a cash-settled product to the CME and crypto facilities Bitcoin reference rate. We introduced that product in December of 2017. It represents 5 Bitcoin. Since introducing that contract, we have since introduced options on Bitcoin futures. We launched that in January of 2020. And then we also, let me quickly share a chart to just show the progression of, bear with me one sec. So hopefully everybody can see that. But when we look at the progression of cryptocurrencies at CME, like I was mentioning, we launched options back in January of 2020, and then this year we launched Ether futures contracts, also a cash settled contract representing 5 Ether, and then we also introduced micro Bitcoin futures contract just this past May, and that contract is 1/50th the size of the larger Bitcoin futures contract and represents 1/10 of a Bitcoin. So what we've seen, across our markets, when we look at the types of users that are in this market, we do have a very high concentration of what we call, say, institutional participants, right, across our market. So you have the traditional proprietary trading firms providing two-sided markets. We have crypto funds, crypto native firms such as lending and borrow platforms active in our markets. But what I believe, when people speak, say, about institutional participants, I think that most of the times they're really referring, say, to the presence of hedge funds, asset managers, and banks. And at CME now, we see all present. Traditional macro hedge funds began entering our market in earnest, I'd say, about around Q2 of 2020. We also began to see large money managers begin to dip their toes in our markets. We're seeing, as a result of that increased activity now, we're seeing more banks active in the market because now they're providing access to those hedge funds and asset managers. Banks now represent about 12% of our cleared cryptocurrency futures volume and are now actually actively trading. I mean, what is true is that this is really a market that is no longer can be ignored, and institutional participants need to have a presence. Now, when you consider, say, price discovery, at CME, since we launched, the first Bitcoin futures contract, we've had over 9,000 accounts trade this product. Our market is available nearly 24/7 on a bilateral basis, but when you look on screen, it's more a 24/6 market. But we see activity across the trading day. In fact, about half of our volume is traded before U.S. regular trading hours. So before 9 a.m. New York time, you've already seen about half that volume traded on screen. Let me just quickly share another slide showing, say, the progression that we've seen in terms of volume. Bear with me one sec.
Yes, please. Yeah.
hopefully everybody could see this slide. But what you see here, it's really the progression of our collective cryptocurrency offering since we launched back in 2017. And you could see, I mentioned the presence of hedge funds and asset managers entering the space. So you could see a jump in open interest beginning, say, Q1, going all the way to Q2 2021. That open interest represents, say, the number of positions that an entity is holding, which positions that haven't been closed. And then you see another big jump in Q4 of this year, really on the legs of the introduction, say, of the first, Bitcoin ETFs, which use our futures as the creation units, right? So we see entities as those products gain interest. We see interest in our futures growing. And we see the marketplace, now we're trading upwards of $7 billion per day across our Bitcoin futures, micro Bitcoin futures, and Ether products. So certainly the argument can be made that price discovery is occurring at CME. In fact, in terms of open interest, we are now, say, the number one marketplace compared, say, to other regulated and unregulated derivatives platforms. We are now the number one exchange in terms of open interest. So price discovery is occurring at CME.
Спасибо, Giovanni. Время нашей сессии подошло к концу.
Thank you, Giovanni. I think we are running out of time with your session. Perhaps I can offer 30 seconds or maybe less than a minute to the panelists for their final thoughts as to what we might expect in the crypto world. Giovanni, perhaps we can start with you so that we have you online, and then Andrey, Konstantin, and Alina.
Giovanni, вы слышите?
I'm sorry, could you repeat the question, please?
Да, буквально.
Giovanni, maybe I can ask you for a thought or two about how the market is going to develop in future. What is your opinion about that?
Oh, yeah, absolutely. No, I think that we're still at the very early stages. I mean, we are seeing institutions begin to trade this space, but I think, institutions need more information, right? They need data. They need to feel comfortable, say, with this new market. They need ways, say, of analyzing and being able, say, to make decisions, right? So they really need to understand the use cases and the ability, say, for cryptocurrencies to really intermediate markets, improve, say, the movement of money and the movement of information. So as more of that happens, we're going to see this space grow more and more.
Спасибо, Sven.
Sven,
Thanks. Yeah, I think as well, cryptocurrencies will have their place in an investor's portfolio going forward. Will it be Bitcoin? Big question mark. But I think this asset class in one form or the other will be extremely important going forward, in particular central banks coming in. Here, I still see the biggest risks that central banks will try to promote their digital currencies, and that therefore there will be cryptocurrencies around, but maybe the space they have in the economy are a bit more limited than people now can imagine. Nevertheless, it's probably not me that will judge about it, because the digital natives are coming, those that are 24, the oldest ones now, Generation Z, and they grew up with a mobile phone in their left hand and a mouse in their right hand. So probably I'm already too old to do a final judgment, but I would agree that they will have a place in investors' portfolios.
Спасибо, Андрей.
well, you cannot really make a piece of meat out of the minced meat back, but I think that the digital currencies of central banks would probably postpone or prevent cryptocurrencies to globally capture the market. However, there will be some niche for them. Another interesting phenomenon is that thanks to cryptocurrencies, there are opportunities for each person to issue his or her own money. And technologies is something that you cannot overcome or fight back, and regulators and the governments need to kind of like understand what to do with that, depending on what, how they react and how fast they react, and how it is going to be harmonized internationally. And this would really define the next 5 to 10 years, how the situation is going to develop with money. Perhaps I'll start with the story or anecdote. A major US broker about 3 or 4 years ago bought the first page of Financial Times, where on page 1, the broker announced that crypto is a scam. Let us not invest in crypto. Let us save our clients. However, sometime later, like 3 or 4 years later, that broker became one of the largest brokers to support the launch of the crypto transactions, so crypto business. So you need to appreciate your mistakes. You need to realize that the crypto is here. So 2 advices for you. Even if in Russia today the regulator would not be supportive, or de facto actually prohibits crypto, still allocate some resources to do research. You cannot ignore that asset class. And also during that research, please spend money to study the market. The market is fragmented, and if you have the good quality of your setup of access to crypto, this would define the quality of your products that you would do for yourselves or for your clients. We're quite positive about the future developments, and we are already stating some inflow, a huge inflow of new players, and we expect further growth of players with professional background in exchanges and of native digital players, as it was mentioned. And in terms of the infrastructure, we think that the crypto market will be resembling more and more the traditional market. Although clouds are not going to go away anywhere, and institutional investors and we as vendors are going to adapt to low latency solutions in cloud ecosystem.
Thank you, Alina. I know that there might be questions from the audience, but time is up. So you've got champagne for the networking. Thank you, and let's give our speakers a round of applause.